All right. Hello, ladies and gentlemen. Welcome in my West Georgia students and welcome in my lovely little trader nerds. Good to see everybody. Hope y'all having a wonderful day. And wow, what a day in the market. Wow. Are we printing money today or what? Look at this. P&L on the day, $22,660. Are you kidding me? Yes, hallelujah, man. NVIDIA earnings were crazy. And look at this, y'all. It sent the whole market up 2% today. Check your VOO stock, y'all. You are making money. We are doing good. Look at this, y'all. The high just hit 5,100, 203 up. Look at this. The VIX is down to 14.35. We do have low volume, though. Look at this, 3,600 contracts. So it's on low volume. But we are up, and away. What does the Big Green Monster say? Well, let's see. Big Green Monster says that we are up, and away. So with that being up there, y'all, it is a matter of time. We are going to the 51-23-10. Bank it. It is happening. And this is just an amazing. Look at there. Look at this. This has not happened a lot. Yeah.
I don't want to do it.
Okay, Jojo, after I get finished my class, I'll do it, son. I'm sorry. Let's see. So we are up the 5,100. So we'll see if we can maintain that or not. But everything looks really good. So let's go and see how our account is doing today. And let's see if we can see what our net lick is in this account. We are at, let's get the right one. Let's see. The right one is the mega account. And let's double click that. And you go to that. All right, so we are at 376,658. I am in a class.
Dad, Lord spray the water on me.
Okay, well, y'all both getting a whooping when I get down from here. 376,
No, I didn't.
658. 376, 658.
Fire.
376, 758.
Fire.
376, 658. Hey, y'all both getting a whooping unless y'all go downstairs now.
Well, we're moving on now to the side, to a deluxe apartment in the sky.
All right, y'all. So this is good. So really, let's see, we've made $12,514 in this account. And I really need to take whatever this was minus that since we didn't have that much money. So let's see if we were to, let's just see how we're doing this far this year. This is good. So if we took 459,371 and I've transferred out to another account, 95,227.86, that would give us 364,143. So we are up. Let's see, we are up $12,514.86 divided by our capital of 364,143.14. We are up 3.43%, y'all. That is well on target for our 20% annual return that we are looking for. So we are looking at good. So yeah, that's good. So let's see what our Greeks and ratios are today. Remember, we monitor three things. We monitor deltas. This is our speedometer. Theta is our fuel gauge. And the buying power is our tachometer, how much juice we are basically revving up our engine. So let's see what our deltas are today. They should be lower. Market goes up, deltas get lower. So we're at 290,376. 290,376. 290,376. All right, so theoretically, y'all, we should make $376 a day in this account. VIX is at 14, and our buying power usage is, let's see, make sure we got the right account here. Let me sure I got that only account there. So our positions are, we don't count Bill because Bill is our Treasury bills ETF that we're holding. So we're only going to count our options trade. So 141,300 is our buying power. 141,300. Okay. So we're using 37% of our buying power, and our position sizing basically says that after 15 weeks, which we are at now, we should have a total of how many positions on? we should have 15 positions on. And how many do we currently have? We currently have 15 positions on. Okay. So 13 of which are the naked put. So we've got 15 positions on. So I've got a feeling that we need to close something and take some Applebee's money so we can go to Applebee's. Oh, we've got some stuff here that's telling us to close here. Wow. Waka waka. All right. That's interesting. Anything else telling me to close today? No, nothing else. So let's do this. We probably need to take off our oldest naked put, which would be naked put 11. Because remember what we're doing is we're taking one off every week and we're putting one on. So we're taking risk off. So this is a naked put 3,900 with 68 days to go. Is that right? No, that can't be right. Here's my oldest trade. Let's see. Oh, here's my old trade. There we go. That's MP11. Here's PDS1, PDS2, PDS3, naked put 4. For some reason, I got them out of order. So naked put 4 has 35 days to go. I don't know. We could leave it or we could take it off. Let's see how much profitable that is. Y'all remember 3,800 with the NP4. Let's see if we can go find NP4. If he's 95% more profitable, we need to take him off. So let's go NP4. NP4. Y'all see him scream. Somebody just yell out. Here we go. NP4. And he is at 92% profit. So I'm going to leave him on, I think. We want him to be about 95% profit. So let's leave him on. Now, interestingly enough, we don't want to go into the valley of death on our Black Swan hedge. So let's go back to that one and see what we can close this for. So this is the Black Swan hedge 3 or 2, and it's 3 puts that are the 3,300s. Interesting. So 3,300s with 21 days to go. Now, does anybody know why we're closing those? Yeah, that's a lot, Matt. That's a lot. Yeah, absolutely, Hal. Check your GTC orders, y'all, because we're going to have them filling on 2% up movement. There's no doubt about it. So this says to close this because we don't want to get into that valley of death. Y'all remember the valley of death? Let's just draw it. So valley of death looks like this. You remember our thing looks like this, right? Our profits if we go to the downside. But remember, there's this little thing that dips down like this. And within 14 days to expiration, you start getting into that valley of death if the price were to go down, and you could lose a lot of money on that hedge. So let's just close those out. We wanted to close those out at 3,300s at 20 cents, but we're just going to have to close them out now. I'm going to stay with my rules. I could go another 7 days, I guess. So that's in my working orders. We've got the 3,300s. Where are those at? 38. No, let me go back again. Come here, Bob. 3,300s at short hedge, 90, 21 to go, 3,300s. Do I not have those in here? Hold on. 3,300s, 3,750. God, I don't have a GTC order in there. Maybe it failed. Let's see. Did that fail at all? 3,300. Over here, 3,300. I don't see it. Maybe I just didn't have it in there. Let's see if we can find that little booger because we need to close him. He's a 3,300 with 21 days to go. Let's find him. And it says BSH short 2. See if we can find him. Don't you hide from me, you little jackrabbit. BSH 2. You'll help me find him. BSH 1. BSH 2. Let's put debit spread. PSH 3, 34.50s. All right, let's go down to these. See what we got here. BSH 2. Here we go. There they are. 3,300s. Yep. So what we could do is ungroup those. Well, let's see if it'll let me just close those. Yeah. Okay. And let's see what we could close those for. close position, 3. Okay, that's not bad, y'all. We had them down for 20 cents, but it says, let's see if I can close it at 20 cents. See if we can get out of those. Nope. Let's go to activity. Let's replace that order. We'll pay a quarter for it. And that's about the time that they should be able to come off. 25. There we go, baby. Whoa, yeah. A double whammy. All right. So we close those just like it said, and we close those at a quarter. See how much money we made on those. We exited on 2/22/24, and we made $431.58. Beautiful. Y'all, that's how you do it. So we close 3 there. All right. So what I should do now, let's see how many, we said we were not going to close anything. Okay. So what we want to do now is put on a new trade, right? Because that's what we do. We do 2 tranches every week. So let's go put on 2 tranches. ES, we're going to trade, and we're going to go out to 120 days. All right, y'all, in my college class, you've heard us talk about 120 days. So we want to put in a double tranche. We're going to buy the put debit spread first. So we're going to buy the 49.50. We're going to sell the 4,900. And we want to do 2 quantities of that. Beautiful. And then we're going to go and sell 4, because this is a 1-1-2, so 2 tranches of the 5% probability being in the money. Let's see, that's going to get us right here. 42.50 at 5% probability being in the money. We're going to do 4 of those. And we're going to try to bring in 15.75 a piece for those. And that ain't working. So we'll go in here and we'll bump it down. And we'll go down to 15.50. That should fill. There we go. Now, all right. Now that I closed those 3 puts, right? It's probably time for me to start another hedge. Now, remember, on the Black Swan hedge or the Sweet Bobby hedge, whatever you want to call it, the best time to buy complete hedges is when the market is up. Well, the market's up 2% today. I'm thinking about putting a full tranche on of 12 shorts and 20 longs. This is going to cost me about $1,000 to $1,100 to put on the full tranche of these, but I just feel it's a great time to do it. Plus, we've got profits plenty. Daniel says, it's my first day here. Can you explain how do you calculate how many hedges you need for your portfolio? Hey, Daniel, welcome in. So if you want to be totally hedged, you should have, and we're not there yet, but you should have 3 hedges in ES for every one. And this is what we come up with, y'all, for every 1-1-2. If you want to be perfectly hedged, you'd have 3 to 1. But remember, these things ain't free. So every now and then you got to buy these things. So what I'm going to do is buy a few of these, and let's see let's just set it up and let you see what it looks like. We'll probably do it in a couple of accounts, but I mean, here's the deal, y'all. I mean, I just made a ton of money. So I'm like, hey, use some of my money to get us some hedges in. And how many hedges do I have in currently? Let's see. So now we've got, let's see here. We've got 30 shorts and 43 longs. Look at that, y'all. We've got 30 short puts in our hedge and 43 longs. So what I'm about to do is I'm going to add 12 shorts, make that 42, and I'm going to add 20 here to make that 53. Now, what does this trade look like? Well, let's see if we can set it up over here. And I'm going to go out 120 days for the hedge. Here we go, 120 days. And what I'm going to do is I'm going to go down to the one that we can sell for $3. Where's that? That's $3. And we'll just model this for you. So we want to do 3 of those. Quantity 3, 2, 3. Actually, we want to do 12 of them. because that's 4 tranches, 12 of those. And then we want to buy 20 of those. So let's do 20 of those. 15, 16, 17, 18, 19, 20, 12 and 20. Now let's see if we can see what these look like. Let's see here. Let's go over here. Let's uncheck everything. Let's do here and here. See if we can see what this looks like over here. It may not look as good over here. All right, so here's what we're doing. We got this little thing. Come here, little baby. Come here, little kitty kitty. Little kitty kitty kitty. Doesn't look good over here. Let's go do it on the other platform so you can see what this hedge looks like. Let's go to trade and we'll go ES and we'll go 120 days. Stop it. Quit it. Go 120 days. 120. Either one of these will be fine. Let's go sell 3 of the ones that are $3. So this 3,100. I said 12. And then hold your control key down and grab the 30/50s. And we're going to do buy 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. 20 of those. Okay, now let's look and see what this is going to look like. And this is what y'all are going to love. Analyze trade.
What's the password?
Beth and Bob 203. Explanation point, capital B. All right, so here we go. This is this trade. And let's see what it looks like. If the market, oh, darn it.
Beth and Bob.
Hold on, baby. I'm in a class, son. I'll tell you in a minute. Let's fix this up. Here we go. And let's go high positions. So we're only showing simulations. And then we want to just do the 12 and 20. Let's see, 540. Let's get that off. Now, that should be it. Sorry, y'all, I'm just analyzing this trade for you. All right. So check this out. If the market goes down, I'm not showing my BP effect. We should make $10,098 if the market goes down 20%, but that doesn't take into effect our explanation point. I'll show you what it looks like when you add volatility in here. Vol steps 4, bump this up to 10. So in the event that the market crashes 20%, this trade that costs us, y'all watch these numbers over here. Okay, watch these numbers over here. 20% down should give us $93,000 in the event that we just crash, baby, crash, baby, crash, baby, crash. Now, that's not bad, right? If you can put on a hedge that costs you $1,000, if you are doing, can do it for a $93,000 profit if the market were to crash. So let's go do that trade. Let's go over here and let's clear it out. Because you can't, I don't think it'll let you do that full trade. Well, this trade over here is illegal, I think. Let's see if it is. Yep, it's not supported, so you got to leg into it. All right, so let's do that. Let's go back to trade table. We'll delete this leg. Well, let's buy that leg first, actually. Oh, crap. Delete leg. So we're going to buy 20 of these. We know we'll have the buying power to do that. Buy 20. And we're going to bump that down to $3. See if we can get filled at $3. That would be good. Come here, baby. Nothing. Jack, squat, crap, flipping nothing. Replace order. Got to make it less advantageous. Let's pay $305 for that. And we are in. Okay. So we bought our 20. Let's sell our 3 or 12. 20, 12, 12, and we're going to try to get that 320. Let's see if we can do that. Hey, we got it. There you go. Be greedy. So now we've got that $93,000 hedge on that cost us about $1,000 to $1,100. Beautiful. That's how you do it. All right. So all I got to do now is, yes.
I was wondering, do you keep track of all of these over time, just to come up with some figure after, like 4 or 5 months to see how much you actually had to bring in and how much the campaign actually costs, if any?
Yeah, I think what I need to do, Victor, is actually come up with a little formula that keeps up with my debits and credits just on the trades that are short hedges and long hedges. That's what I need to do to figure out how much, longs and shorts that I have and keep up with the debits and credits on that. That's probably pretty easy to do in the next version of the spreadsheet. That you're exactly right.
Probably separate tab just for these hedges.
Yeah, that would be great. That would be great. I think that's an excellent suggestion. I'll start working on that. All right, any other questions? God, isn't this fun? Again, let's go back. Up $22,000. Praise the Lord. Hallelujah. What a great day. Only in America, y'all. Y'all have a great day. I will see y'all tomorrow. Hey, hey, Hal. Hey, Hal.
Yeah, did you send me the copy of the spreadsheet? I put the info in the Ninja Nerds.
Oh, did you? I'll do that. Did you put it today?
I put it yesterday or a couple days ago.
Oh, I thought I did send it to you then. Did I have if I have a thumbs up on it, that means I sent it to you.
It didn't have one when I looked at it yesterday.
Okay, then I'll look today and make sure. And if you don't hear from me like right after this recording, make sure you send it again so I'll put it in there.
Okay.
Yeah. So Daniel wants to know, can you show the profile together with the 112 position? Sure. Let's go do that. Let's go back over here. We'll keep this going a while. So we're analyzing that, right? So now let's go analyze something else. They wanted to see, hey, what about doing a 112 position? What does that look like together? Okay. Let's do it, baby. We got nothing but time. I got all the time and money in the world. All right. So let's go 120. So let's see what one of these looks like, right? So we got
What?
Jojo, I'll show you in a minute, baby. So we go to, let's see, 5% probability being in the money, the 112. So here we would sell two of those, right? And then we would go and we would buy the 25% probability being in the money. So we would buy one of those and we would sell one of those. So that's a 112, right? Is that right? Yep, let's get into this credit. All right, so that's a 112. So let's analyze this. Analyze trade. Go over here, go to ES. So we can see them together. Make sure we got everything together. So this is 1112 with 4 tranches of the Black Swan hedge. Let's see what that looks like. Look at that, y'all. You're still up 25,000 on a 20% down move, but between 11,000 and 25,000. So let's see what happens if we make this 3 tranches, which I think is where we needed to be if you're going to have it ultimately hedged. So that'd be 9, and this would be 15, right? That's 3 tranches. See there? Look at there, y'all. You're perfectly hedged. And Daniel, that's what we were talking about. If you wanted to know the exact thing, it's really 3 to 1. Now, and 2, this thing is going to lose, the hedge is going to lose a little bit of value over time, and it won't be as strong and everything. But, roughly starting out, if you started them all together, you're looking at 3 to 1, and you're perfectly hedged to the downside. The thing is, with this hedge, remember, my goal is to have thousands of these hedges on at some point. But I want to do them as, cheaply as possible, and I want them to mostly pay for each other. So, we're on that process. We're in the thing. Oh, and what we got to do now is, now that we've done this, don't forget, you got to issue a closing order for this, which apparently I forgot to do. And remember, you want to close this position at 20 cents. And do a GTC order, which is good till cancel. Ta-da! GTC orders cannot be canceled when the market is between sessions. Okay, whatever. So now we've got a working order there. That's how you do it. Oh, my pleasure.
Don't you need another working order for you buying your extra longs? No, you can put the whole edge on at one time.
Yeah, I put the hedge on today. I wanted to do a whole hedge. Since the market was up big, I said, let me just goose this thing up a little bit. Let's do another big hedge. Yeah. I was willing to use part of my profits on the day, $2,218. I said, man, that's an outlier. So I was like, let's bite into that a little bit. Let's use 1,000 of that for this, for a big hedge to the downside. All right, guys, great session. Hope you have a wonderful day. I will see y'all tomorrow.